Welcome to Whiteboard Wednesdays, Real Talk with a Realtor. I'm Sharice Wynn, also known as Agent Lady. And today we have
Tony Bomis.
Tony Bomis here with Coldwell Banker Home Loans. And he is going to do the pleasure of talking to us about FHA loans. Tony, what is FHA loan?
I'll tell you what, FHA financing is great. A lot of first-time buyers like to use it because it allows them to do a lower amount of money out of pocket, which they like. Also, for somebody that maybe doesn't have too much credit history built up yet, it can be good for them because maybe their credit score isn't quite as high as someone that's been, buying properties or having car loans or having credit cards for years and years. So FHA is a little more flexible with credit score, and it's also a lot more flexible with down money. It lets you get a 6% seller's assist.
Okay.
And when you can get a seller's assist like that, it ends up absorbing a lot of the closing costs.
Okay.
And the client's able to come out of pocket with less money. So that's why it can be a great financing source for a lot of buyers.
So FHA, how much down is it? Which percentage down is that?
So the minimum down for FHA is 3.5%.
Okay.
And that has to be either from the buyer's funds or it can also be gift funds.
Okay.
But the minimum down payment is 3.5%.
So excellent. So 3.5% down, up to 6% seller assist. Now, you said it has a little bit more flexibility. So what is the lowest credit score that you could do with an FHA?
That's a great question. So a lot of companies have the lowest score is 620. We're actually a little more aggressive. We'll go all the way down to a 600 credit score for an FHA loan.
Okay.
So 600 is our level. Most places are 620. Every now and then you'll find a place that can go a little bit lower than that, but that can be difficult because then you have to find a lot of compensating factors to be able to push that loan through.
Gotcha. So if you go down to 6, like what's the norm? Like what's a good credit score for FHA if you had to put a number on it?
See, that's the other nice thing about FHA loans because if you have a 620 or a 600 score versus like a 680 score, you're going to have a really slight difference in the interest rate. You might be 3 7/8 if you had a 660 score, and if you ended up with a 608 score, you might be an eighth of a percent higher, at 4%, just giving random numbers. So that's another reason that people lean towards FHA loans a lot of times. If they feel like their credit score isn't quite what they want it to be yet,
right,
it's a more forgiving program. If they ended up going with conventional financing instead, at a 604 score, you probably can't get financing. If you got up a little higher score-wise, though, you still would have a pretty significant rate adjustment because of the score. And then you'd also have an adjustment on the PMI, which is the private mortgage insurance. Private mortgage insurance is what you pay when you typically do less than 20% down. But
yeah, I guess speaking of private mortgage insurance, for FHA,
yep.
Private mortgage insurance is now for the life of the loan, is that correct?
So it is for the life of the loan. It's called the mortgage insurance premium. It's a little bit different than private mortgage insurance on a conventional loan, but it's the same concept.
Okay.
But yeah, so on an FHA loan, if you do less than 10% down, your mortgage insurance premium lasts for the life of the loan.
Oh, so you're saying if you do at least 10, then it won't last for the life of the loan?
That's correct. Then it could last, 7, 8 years, depending on the down money that you did, or potentially less than that.
Well, I definitely learned something new today. That's pretty awesome. Okay, so 10% or more, it'll be for maybe 7 years or so versus the less than that is for the life of the loan.
That's correct. That's for 30-year loans, exactly.
Okay, all right, that's pretty awesome. And can you use this type of loan to buy multifamily?
You can. That's actually a great point because a lot of clients, if they're looking at multi-unit properties, if you do conventional, sometimes you might have to do 15% down, 20% down, depending on credit score and other things like that. But with an FHA loan, you could still do 3.5% down as long as you're occupying the property.
Okay.
Because FHA doesn't let you buy investment properties with their financing. Okay, it's supposed to benefit homeowners who are using the loan in order to actually occupy the property. So if you found a 2-unit property and you said, I'm going to live in the one, I'm going to rent the other, you're still able to do that with 3.5% down. You're still able to get a seller's assist of up to 6%. And the other nice caveat to that is if you buy a multi-unit property with FHA, you can finance more too. So for a 1-unit property, The loan limit is roughly $379,000. If you go to a 2-unit property, you can finance roughly $100,000 more, 470 something, I think it breaks down to. And then to go to a 3-unit and 4-unit, you have roughly another $100,000 for each additional unit that you are buying basically. So for a client buying a 2-unit property or 3-unit property, they can come out of pocket with 3.5%. It can really be an amazing opportunity for them.
That's pretty awesome. And I think you can also co-sign with an FHA loan, correct?
So yeah, you can, the time you would use a co-signer or an FHA loan actually wouldn't be to offset bad credit.
Okay.
So let's say a client had a 580 credit score and they said, well, Cherise, can I have my mom or dad sign with me? Because they're 700 score, they have great income. Well, actually, in that scenario, that wouldn't help the client.
Okay.
Because on an FHA loan, the loan is always qualified on the lower of the scores. So if the one person is 580 and then the parent is 700, unfortunately, they have to qualify on the lower of the 2 scores. But when a cosigner is useful is if a buyer just made, let's say, $20,000 a year of income, but their credit was pretty good, let's say mid 600s, upper 600s. That person's a good person to get a cosigner, because the cosigner in that case would be able to add the income, and the person that's actually occupying the house already qualifies based on their credit score.
Gotcha.
So the time to use a cosigner is when you do have a sufficient credit score, but you don't have sufficient income for the application.
Well, that makes a lot of sense, Tony. That was super helpful. How do people find you?
They can find me by walking into the office at 1401 Walnut Street, 8th floor, or they can give me a call, 610-389-1590, or you can get in touch with Cherise and she can give you my contact info.
Absolutely. Well, that pretty much sums it up. I hope you guys learned something today. Remember, friends don't let friends buy or sell real estate without the agent lady. Make it a great day, guys.